Welcome back to Investing Talk Podcast. Today, we're zeroing in on a company that's, well, really at the forefront of tech and finance, D-Wave Quantum. We're going to analyze their upcoming earnings, try and pull out the most important bits of data, to give you a clear picture of what's really at stake for them. This isn't just numbers on a page, it's kind of a window into the future of quantum computing. Before we dive in, though, just a quick reminder, if you find these conversations useful, please do hit that subscribe button, maybe give us a like, and leave a comment. It really helps us out. And hey, if you feel like showing some extra support, you could consider buying us a coffee. We'd appreciate that. Oh, and also, if there's a specific company you'd like us to look into down the road, just let us know in the comments. We definitely read those. Okay, so our mission today is pretty focused. We want to pull out the key insights from the financial data, the market stuff, everything we can find to understand D-Wave Quantum's position right now, just before they report. Let's try to cut through the noise, highlight what actually matters. So let's get right into it. First up, when exactly are they reporting?
Right. So D-Wave Quantum's earnings are set to come out before the market opens on Thursday, August 7th, 2025. And then they've got their conference call scheduled for 8 a.m. Eastern Time. That call, especially being early, that's often where you get the more candid comments from management. Definitely one to keep an ear on.
An early start for quantum watchers then. So what's the street expecting? What are the analysts saying for this report? What are those key consensus numbers?
Well, for this quarter, the analyst consensus is looking for revenue around $2.55 million. And on the bottom line, earnings per share, or EPS, that's expected to be negative 0 to 7 cents. Now, being in the red like that, it's not really unusual. It's actually pretty typical for these early-stage high-growth tech companies, especially in a field like quantum computing, which is so new and specialized. The focus is just heavily on R&D, building the tech,
Yeah, that makes sense for a company blazing new trails. Now, what about the whisper number? We hear that sometimes that unofficial expectation that can sometimes move the stock even more than the official number. Is there anything like that floating around for D-Wave?
That's a good question. And actually, looking at the info we have, there isn't really a publicly known whisper number for D-Wave Quantum right now. And that lack of a whisper number, well, it kind of tells you something itself, doesn't it? It could mean either the analysts are all over the place, no strong agreement away from the consensus, or maybe just not enough big players have formed a strong off-the-record view. So what happens is the official numbers become even more important. It could make any surprise, good or bad, feel even bigger.
Huh, interesting. So the official numbers carry even more weight then. Okay, speaking of expectations, what about D-Wave's own guidance from their last call? Did they give us any hints for this quarter? Or we're flying a bit blind?
Well, they didn't give explicit formal guidance for this quarter, Q2. Not for revenue or EPS specifically. What they did do was sort of reiterate their overall growth expectations for the whole year, which is interesting because their Q1 performance back in 2025 was actually quite strong against what people expected. They reported revenue of $15 million, which was way above the $10.5 million consensus, a big beat. And their EPS came in at negative 2 cents, also better than the negative 5 cents consensus. So yeah, they definitely delivered last quarter, but they kept their cards pretty close to their chest on firm Q2 numbers, just stuck to the broader annual outlook.
Right, so a strong beat last time, but quiet on the quarter ahead. That kind of leads us into their history then.
Yeah.
How has D-Wave's track record been with earnings surprises overall? Do they usually beat? Or is it more of a mixed bag?
Looking back, especially that Q1 2025 beat, negative 2 cents versus negative 5 cents expected. So a 3-cent beat, that was solid. And while we don't have the specifics for Q4 2024 right here, there seems to be a bit of a recent trend where D-Wave has managed to outperform these sort of modest consensus expectations, usually by a small amount. So yeah, they seem to have a bit of a habit of just nudging past what analysts predict, which can build a little confidence, even if the numbers themselves are still negative.
Okay, so maybe a quiet reputation for doing slightly better than expected. How has the stock typically reacted after these reports? Does it jump on a beat, tank on a miss?
The specific immediate price moves right after past earnings aren't detailed in what we have here. But what we can see right now leading into this report is some pretty positive momentum. As of August 5th, the stock was up, 6.72%? That definitely looks like a run-up into the announcement. That kind of buying suggests investors are hoping for good news, or at least expecting some significant movement they can trade on. The market's definitely anticipating something.
Okay, so bullish sentiment right now, setting up for potential volatility. Beyond the headlines, what about the company's broader financial health? What are the underlying trends telling us, especially given their business?
Yeah, this is where it gets really interesting, and it's crucial for a company like D-Wave. While revenue growth has been beating those conservative expectations, like we said, the deeper metrics, they show ongoing negative EPS and just, wow, profoundly negative net margins. Like Q1 2025, the net margin was negative 617.8%.
Oof. Minus 600%.
Yeah. And return on equity operating margins also deeply negative. And this is the key context, right? This isn't just bad news. It's kind of the cost of doing business at the absolute cutting edge. These massive negative figures are pretty typical for early stage quantum firms. The R&D spend is astronomical. They're literally inventing the future and then figuring out how to sell it. It just requires a completely different way of looking at value compared to, say, a mature industrial company.
That paints a really clear picture. Huge investment for a potentially huge payoff down the line. Okay, shifting focus slightly. Were there any big news items during the quarter? Any major catalysts, product launches, big partnerships that might have influenced things?
It's interesting, but no, our sources aren't really pointing to any specific major headline-grabbing news for Q2 itself. No big product drops or massive partnership deals announced. It seems like the recent stock appreciation and the general good feeling around the sector might be driven more by just positive speculative sentiment across quantum computing generally, less about a specific D-Wave event. I mean, they do keep talking about progress on their ecosystem, getting more business customers using their tech, which is vital long term, but no single big bang this quarter that stands out.
Okay, so it's more the rising tide lifting the quantum boats, perhaps. How are those wider sector trends and maybe macroeconomic factors playing into this? Is quantum immune, or are there currents investors need to watch?
Well, the whole quantum computing sector is still highly volatile, very speculative. It's definitely tied to things like overall tech funding cycles, investor risk appetite in general, and these big exciting themes like AI and quantum working together. But what's maybe different is that venture funding and institutional sentiment for quantum is so speculative and long-term focused that it often doesn't react much in the short term to traditional macro stuff like interest rate changes or what consumers are spending. It's really a long game, needs patience, and a high tolerance for risk.
Got it. So in that speculative environment, what have analysts been saying specifically about D-Wave recently? Any upgrades, downgrades, price target shifts we should know about?
Again, looking specifically at recent analyst chatter related to this quarter, we're not seeing any notable upgrades, downgrades, or price target changes in the data we have, which kind of suggests that the consensus view remains cautious. And that fits, right? It fits with the company being early stage, high risk, high reward. Analysts seem to be mostly holding steady, probably waiting for more concrete proof points on the commercial side or a clearer path to profit before they make any big moves on their ratings.
All right, let's pivot to the technicals, the stock chart itself. How has D-Wave been trading leading up to this report? What's the chart telling us about sentiment?
So as we mentioned, up 6.72% as of August 5th. That's a pretty strong signal of bullish sentiment right before earnings. Definitely suggests that run-up we talked about, with investors betting on good news. If you look at the moving averages, they help smooth out prices to see trends. The 50-day average is around $16.78. The longer-term 200-day is down at $10.53. And the stock itself, trading at $17.01. So it's clearly above both those key averages, which reinforces that strong short-term bullish feel.
That is quite a run. Shows real enthusiasm. So with that move already happened, where are the important price levels to watch? Where might the stock find support if it falls or resistance if it tries to climb higher after the report?
Okay, key levels. For support, the first area to watch is probably around $16. The stock consolidated there recently, so it might act as a floor. If it breaks below that, then maybe look towards $13.50. That was a previous resistance level it broke through, so sometimes those turn into support.
Okay.
On the upside, for resistance, the 52-week high is up at $20.56. That's a big target. And maybe this psychological $18 area could also act as a hurdle. Getting through those levels could signal more buying interest. Falling below support, well, that could mean a pullback.
Right. Given all that, especially the run-up and the stock's nature, what kind of move is the market actually expecting after earnings? Like how much volatility are options traders pricing in?
Well, we don't have the exact options pricing data here, but knowing this is a speculative, lower float tech stock, meaning fewer shares readily available, which can amplify moves, and seeing this pre-earnings action, it's very likely the options market is implying a pretty substantial percentage move, a double-digit move. We could be talking, plus or minus 15%, maybe even up to 25% once the numbers are out. The market is definitely braced for a big swing, one way or the other.
Well, 15, 25%. Definitely not for the faint of heart then.
Oh, yeah.
It really underlines how much is riding on this report. Okay, let's game out the scenarios. What does a bullish outcome look like? What would D-Wave need to deliver to get that kind of pop?
Right, so for the bullish case, you'd need more than just a simple beat. You'd want what they call a beat and raise. So revenue needs to come in above that $2.55 million consensus. The loss per share needs to be smaller than the expected -7 cents, maybe -4 cents or better. But crucially, it's not just the numbers. Investors will want positive updates on actual business progress. Think enterprise customer wins, signing new commercial contracts, hitting key development milestones, things that show the tech is moving towards real-world use. And clear commentary about the path forward, maybe hinting at profitability, showing a strong deal pipeline that could really send the shares higher.
Okay, beat, raise, and show real commercial progress. What about the other side? What does the bearish case look like? What could trigger a sharp sell-off?
The bearish case starts with a miss, obviously. Revenue lower than expected, or a wider loss, maybe worse than -7 cents per share. But again, it's also about the narrative. If customer wins seem to be stalling or projects are getting delayed, that's bad news. Any slowdown in commercializing the tech, if management sounds cautious, maybe hints at funding challenges or needing to raise more capital soon, that would be a big negative. And basically, any lowering of their full-year outlook or anything suggesting that quantum becoming mainstream is further off than people thought, yeah, that could easily lead to a harsh sell-off, especially after the run-up.
Makes sense. So looking past the main headline numbers, revenue and EPS,
Okay.
what's the single most important thing? The real acid test for investors trying to gauge if D-Wave is actually making progress.
Yeah, this is maybe the most critical question for a company like this. While everyone looks at revenue and EPS first, the metric that I think tells the real story is new commercial contract signings and growth in customer usage. We need to see hard evidence that their quantum solutions are actually being adopted, that businesses are signing up, using the systems, paying for it repeatably. That's the proof point that the technology is moving beyond the lab and into the real economy. Without that tangible commercial demand, the valuation starts to look, well, built on hope rather than reality. It's absolutely critical.
Right. Tangible commercial traction. That's the key. Okay, so let's try and pull this all together. After looking at everything, what's your overall leaning heading into this report? Neutral, bullish, bearish. And how confident are you feeling about that?
Okay, summing it up, my overall leaning is probably neutral to bearish and confidence level. Maybe a 3 out of 10, so not very high confidence.
Okay, what?
Well, the rationale is you've got this positive share price momentum, this run-up, which is bullish, but the consensus estimates are still pretty cautious, and the company is, as we've said, deeply unprofitable. It feels like high expectations might already be baked into the price after this run. And with not much major news recently, the risk of disappointment seems pretty significant. Plus, projecting actual commercial traction and how credible their forward guidance will be, it's just really hard to do accurately in the short term for a company like this.
That's a refreshingly honest assessment. A 3 out of 10 confidence highlights the uncertainty. So given that neutral to bearish view and low confidence, what kind of trading strategies might people consider? Different approaches for different risk levels.
Yeah, definitely different strokes for different folks here. For someone who's risk averse, I'd probably say avoid holding the common stock through the earnings announcement itself. The potential swing is just too large. Maybe wait, let the dust settle after the report, and then reassess with the new info. For someone more tolerant of risk, you could look at options. Maybe a short-term straddle or strangle. That's where you buy both calls and puts, betting on a big move, but not necessarily which direction. It's a volatility play. But, gotta emphasize, keep the position size small. Manage that risk. And if you do take a directional bet, use tight stop losses. This thing could move fast.
Right.
And finally, for the true long-term investor, the strategy might be to only add to a position if there's significant weakness after earnings, and only if the report doesn't fundamentally break your long-term belief in quantum and D-Wave's role in it. Use dips as potential opportunities if the story still holds.
That's a fantastic, really comprehensive breakdown of the whole pre-earnings situation for D-Wave Quantum. Really helps cut through the complexity and see what truly matters. So what does this all mean for you, the listener, whether you're an investor or just someone fascinated by this space?
Well, it really brings up a core question, doesn't it? In a sector like quantum, where the breakthroughs can be genuinely world-changing, but getting there is incredibly expensive, and the commercial payoff might still be years away.
Yeah.
How do you actually measure value? Especially when the near-term financials are so deeply in the red, it forces us to think beyond the usual metrics. It's a real challenge.
Absolutely. It challenges how we think about investing in frontier tech. A fantastic point to ponder. A huge thank you for guiding us through all that complexity so clearly. Really appreciate your insights. And thank you, our listener, for tuning in for this analysis. Don't forget, hit like, subscribe, leave us that comment if there's a company you want us to look at. And maybe consider that coffee if you found this valuable. Until next time, keep learning, keep questioning, and thanks for tuning in to Investing Talk Podcast.